Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, July 22nd, 2019. We are now in the final hour of the trading day, and as I mention every day, and it's important, I believe that the most important prices, the most valid prices are the closing prices of the day, the prices that are as close to the close as possible. In my opinion, that is when the large financial institutions take over the market. That is when the market makers take over the market and move the prices to the most valid prices of the day. So those are the prices that I want to make my buying and selling decisions from. So anyway, thank you everybody for coming today. I appreciate it. I just want to make sure everybody can hear me okay. So if you can, please maybe send me a quick little message on the chat. Make sure you can hear me. Make sure we're up and running. So today the market is green. The Dow Jones is up slightly. It's up 20 points. The NASDAQ is up 60 points. That's the clear winner today. And the S&P is up 10 points. So let's see. Hey, Ramble. Good to see you, buddy. Thanks for coming, my friend. Hey, JT. How you doing? Thank you for coming by. I really appreciate it. I hope you two had a really good weekend. All right. So the format for today, as regular, is first of all, we're going to go ahead. We're going to run the U.S. legal disclaimer. I'm going to come back. We're going to go through all of my current positions. We're going to take a look at when I bought them, why I bought them, and how I'm going to manage them going forward. Then we're going to spend a little time on trader psychology. As you know, I truly believe that psychology in trading is the most important component of being able to be a long-term profitable trader. It's the be-all, end-all of trading. So that's why I do like to touch on that every day, and hopefully it will rub off. And then after that, we're going to come back. We're going to take a look at all my, we're going to go through my watch list. We're going to go through one by one. We're going to take a look at each stock. We're going to take a look at the technicals. We're going to look for support and resistance levels, moving averages, ATR channels, MACD, RSI, and hopefully if we're lucky, we'll find a setup at the end of the day where not just one, but multiple indicators line up. Those are my favorite trades, is when you get a confluence of signals from a multiple of indicators. The way I look at that is that the more indicators that line up together at a certain price, the more buyers that theoretically should be coming in at that price. And if you want a stock to go up, if you want to go long on a stock, then it just makes sense, right? That you want to be where you want to be with other buyers. You want other buyers buying at the same time. And then after that, we are going to, after the market closes, if you have any questions at all about what we discussed today, please let me know and I'll try to clarify it. Or, if you have any questions about trading in general, or if you have any issues that you're dealing with in trading, any challenges, please, let me know what they are, and maybe we can, work through it together and come up with a solution. So that is the plan. So, all right. Hey, Andy's here and Frederick's here. Thanks for coming by, guys. Good to see you, man. I hope you guys had a good weekend. So, all right. So that is the plan for today. I'm going to go ahead and run this U.S. legal disclaimer, and I will be back in about 40 seconds. So hold tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. All right. Well, let's take a look and go through my current entries, and we'll see when I bought them, why I bought them, how I'm going to manage them moving forward. So we've had a really nice trade today on Etsy. It's up 3.54%. So, you know, there is a good back-tested crossover approach with Etsy when the 10 SMA crosses over the 50 SMA. Now, if you choose to, you can just follow this mechanically. But the problem is with a long-term moving average crossover approach on an individual stock is you're going to have to hold through earnings 4 times a year. So I did enter this trade back here on 15th of July when the 10 crossed over the 50. Now remember, this is not a mechanical trade for me. This is a discretionary trade. So the next day when it immediately went down against me, I didn't hold it mechanically. This was discretion. It was a discretionary trade. I decided just to go ahead and get out. But what I want to point out is I have noticed this over the years when you have the initial crossover, the 10 crossed over the 50. Sometimes you'll get that crossover and will immediately go against you. And I have found that immediate counter trend move against you often sets up for a good time to buy. So I went ahead just to be conservative because it immediately went against. I just went ahead and got out, but I was looking for a re-entry on this trade. But I needed a trigger, right? I needed something to tell me that, okay, there's some kind of trigger here. Well, I did take a loss from the 15th through the 16th, but then I re-entered the trade on July 18th. And the reason I did was because we had this V2. Here's day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1's close. It wasn't the best V2 in the world. I mean, it was good in the fact that it came up and it did move sideways and it spiked down. This day didn't wash out this day by a whole lot, but because the 1050 had just crossed, and in my experience, a lot of times after you get that cross, you'll have a quick counter trend move before it moves the other way. So I loosened up my standards a little bit on the V2 entry because we just had the 1050 cross. So I did go ahead and enter Etsy back on the 18th of July at 65.24. So I'm going to switch back over to this other chart here now. So this is the same chart, just different indicators. But yeah, we entered here. I did hit one profit target on Friday, and I've hit 2 more profit targets now today. So this has been a really nice trade. So as you guys know, I like to phase out. Sometimes it's 10%, sometimes it's 12%, sometimes it's 15%. It just depends how close I am to my profit target. The closer I get to my profit target, the larger amount of shares percentage-wise that I take off. So did hit 12%, 12%, and 12% approximately. So I'm out of about 36% of this trade. It's been a really nice trade. So going forward, my initial profit target here is at the 70 RSI, the 74.50, but I don't buy this and say, okay, I'm either going to stop out or I'm going to hit this, right? I'm not that rigid. I do look for red flags along the way to tell me to potentially get out of the trade. So what I'm concerned about here today is, see this prior high over here? And do you see how we just went up and we tagged the prior high, and at the same time we rejected the second ATR, which is a little bit of a red flag for me. And this is kind of where the artistic part of trading comes in. Is this enough of a red flag for me to just lock in the position? No, it's not. But what I am going to do, you see I hit 2 profit targets, haven't hit that third one yet, but kind of as a compromise, what I'm going to do here at the end of the day is I'm going to take off one more 12% position because of this bit of a red flag here. It's not enough of a red flag to get me out of the trade, but it is a little bit of a red flag where I want to just take a little bit more off. So anyway, this has been a great trade. I mean, so far from entry to exit, 4.26%. So anyway, that's the plan with Etsy. Unless it closes above this previous high over here, I'm going to go ahead and just lock in another 12% because it is a little bit of a red flag. Now, going forward, how am I going to manage this? Well, you know, at this point, possibly a close below halfway of this bar might be a way to go. If I want to give it a little bit more room, I just use the 5. If we went up and rejected the third ATR channel, that may be another place. So, you know, in trading, there's a mechanical portion to it, and then there's kind of an artistic portion to it. And the artistic portion is what it takes a while to learn. You know, it's just not that easy. Unless you just want it to be completely mechanical, then it takes all the stress off. But I kind of feel like you can do a little bit better with your returns if you can add a little mechanical portion to it. Man, I got all these magpies out here screaming at me. Sorry. Hey, Murit's here. Good to see you. Hello to Norway. Frederick, so difficult to know when to get out at correct time. Yeah, Frederick, it's always difficult to know. You know, I mean, I always kind of say I look for red flags for reasons to get me out of the trade, or at least like today with Etsy, a portion of the trade. Steve says, I'm up 4.05 on my Etsy trade. Hey, Steve Burns, good to see you, my friend. Thanks for the email over the weekend and a reply to my email. I appreciate it. It's always an honor to have you here, Steve. I know everyone's excited to have you. I know I am every time you're in the chat. It's really great. Yeah, Steve is up more on that because he took the Etsy trade on the crossover right here. So he got a, well, I guess it's about the same price. But anyway, close. So yeah, really good trade. All right, next trade, IWM. So IWM has been a completely mechanical trade for me, right? This one you don't have to worry about. You don't have to make decisions or be artistic with it. It's pretty black and white. You enter. We entered when the 10 crossed over the 50, and my exit will be when the 10 crosses back below the 50. You know, I like to phase out of my trades as they go my way. So it's a little different than completely mechanical. But, you know, we did buy this back here at 158.88. Next day, it did have a nice big gap up. I got rid of about 25% of the shares, which is nice because we got rid of 25% in the profit area. Ever since then, it's just kind of moved sideways. We have taken a few profit targets as it's moved. We actually hit one profit target on Friday, and we actually hit another profit target back actually today, I believe. Yeah, we did hit one really quite near the top. So I'm out of a lot of this trade. I only took a half position on this trade because when the crossover happened, it happened at elevated levels, which I don't like. So you know, this has been kind of a boring trade, really hasn't done anything. But you know, this is mechanical. Just going to ride this as designed until either the price goes up, we phase out of all of our shares till we're out, or until the 10 crosses back below the 50. But I like to have mechanical trades. I like to have discretionary trades. Sometimes discretionary trades, you'll get in, you'll get out, then it'll have a huge move again, and you won't have any chance or ability to get back in the trade. And that's why I like to balance it with having some mechanical trades in case you do have a really big, long run. At least you'll have a portion of your capital in those. So just a personal preference. But again, if it keeps moving up, I will phase out. If the 10 crosses back below the 50, I will go ahead and just exit the trade. All right. Oh. All right, so SPY. So in case we have some new listeners today, I do buy the SPY every day every day at the end of the day, and then I sell it first thing in the morning. And I did buy it Friday at 297.17, and I sold it first thing in the morning here at 297.61. So it was a nice profitable trade. We are up a little bit higher than where we sold it, but that's okay. So yeah, this was positive. So you might ask, why would you do that? That seems kind of random, doesn't seem very technical or precise. And I agree with you. On the surface, it does not sound like there's much to it, but this is based upon a back test from Liz Ann Saunders at Bespoke Invest on Twitter. But if you had bought the SPY, the SPY, at the open each day since 1993, and you sold it at the close every day, you would have actually returned a negative 13.9% return. But if you did the opposite like we do, and you buy the SPY at the close each day and sell it first thing the next morning at the open, you'd have actually made 634.2% return, meaning that more than all of the returns in the S&P since 1993 have come in the after hours and the pre-market. People bid it up in the after hours, and they bid it up again in the pre-market, and then they sold it into the open. So you can see here's the blue line. The blue line is the buy in the afternoon, sell in the next morning. The orange line here is the buy in the morning, sell in the afternoon. You can see there's a huge disparity. There's a huge difference. This is very powerful information to know. So this is exactly why I buy the SPY each day at the close, sell it in the morning. And since I've been using it since September 26th, it's been very profitable, been very happy with it. Now, that being said, there are drawdowns, right? There could be multi-year, multi-month or multi-year drawdowns. So, you have to prepare yourself for that mentally and just play the long game on this. And to play the long game, you need to position size correctly, right? So that if you do go down through a couple months or 6 months or a year or longer drawdown, yeah, it's going to suck. You're going to lose money, but let the power of the edge work itself out in the long run. So I kind of consider this basically in a weird way an overnight day trade. So anyway, that is why, based upon this study, it was profitable again today. We've had some really nice profitable. Thursday we bought here, sold right at the top, and then it really puked on us. And then we bought that low and sold it again. All right, what else do we have? VIX. All right, so I did buy the VIX on the 17th of July, and the reason that I bought it was the previous bars running up till that day, we were under 30 RSI and we were under the 30 ATR channel. The day that I bought it on the 17th, we went from under the channel back over the channel. We went from under the 30 back over the 30. So that was my signal to go ahead and buy. There are buyers that come in when the price goes under the 30 and back over. There are buyers that buy when you go under the 30 ATR channel, back over the 30 ATR channel. So, I want to be with those other groups of buyers. So I did buy here. We did hit a profit target. Then it reversed. We didn't hit a profit target on Friday. So we are down on the trade right now. I only took a quarter position of this because it's, it's a volatile instrument to trade. But I did notice, look at the volume coming in. This was a lot of volume coming in compared to the move down. So, to me, it seems like VIX is starting to perk up a little bit. We have a huge earnings week this week. So, I do want to have a little bit of insurance, but I don't want to have insurance just to have it. I want insurance based upon a legitimate entry, and this was a legitimate entry. So we're down today, but not a big deal. I will keep this unless we close under the 30 RSI. My initial profit target up here is the 50 RSI. So if we move up, reject that 50, that will be my reason to get out of the trade. All right, last one. Energy Select. So I did buy Energy Select on Friday. And why did I buy it? Well, I bought it for a couple reasons. we had this V2 entry. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. Excuse me. So this is a legitimate V2. On top of that, you see the green line? This is the 1 ATR channel. I like that we rejected the 1 ATR channel and then triggered that V2 back into the 1 ATR channel. You know how like if we reject a moving average and come back up, that's a good thing. It's the same with the ATR channel. So, you know, this I did not like as much because of this steep down move. You guys know that I like to come down, move sidewards, then have the V1, V2. But on the other, one additional reason I bought this was here we had this V1, painted this triangle. The next day it triggered that triangle, but moved the other way. So whenever you have a bearish move that is followed by a bullish move, to me that changes the dynamics back to a bullish situation. So this was bearish that we had this V1 trigger back up. The next day it didn't hold and went down, but then reversed back up and held. So again, the V2 entry, the rejection of the the 1 ATR channel. We did reject the 50-day moving average as well. We did hit one profit target, as you can see. We bought it Friday at 62.72. We did hit one profit target today at 63.12. So this is moving our way. We are back above the 50 RSI, 51.69. So at this point, as long as we hold this 50 RSI, I'm going to go ahead and just hold this. Tomorrow, if we lost the 50 RSI, I would get out. So anyway, this has been a decent little trade, a little one-day trade. So that's it. So Etsy is doing well on our 1050 crossover. We hit 2 profit targets. I am going to take one additional profit target off because it looks like it's having a problem with that prior high. IWM, this is our long-term approach, the 1050. We did hit one profit target today, but I'll stay in this as long as the 10 stays above the 50. The SPY, we had the overnight SPY. It was profitable. I'll buy that again at the end of the day. VIX, the under 30, under the third ATR channel, back over 30, back over the 30 ATR channel. It's moving sideways here. You know, if we close under the 30, that will be my exit there. And then XLE we just talked about. As long as it stays above the 50, I'm going to continue to phase out on the way up. If it closes under the 50, that will be my exit signal. And then quickly on Johnson & Johnson, this is a put that I sold. I do like to identify a strike price that has support on 3 different time frames. The price that I identified here was 122 on the monthly. We have the 1 ATR channel underneath it. On the weekly, that 122 price lines up right with the third ATR channel on the week. Also has the 200 below it. And then on the daily, it should have some support, I should say, back at the lows back here in December of 2018. So on 3 time frames, there's something that $122 price lines up with. As long as the price stays above this 122 mark by August 2nd, I will be able to keep the full premium on selling the puts. If not, I will be required to buy it down here, but I really don't have a problem buying it down here. All right, so that's that. So let me make sure, let's see. Murat says, after many mistakes, I never enter a trade before setting the target. Sometimes I see a setup but don't see a target, then I don't take it. Yeah, that's really good. It's a really good point. You know, sometimes you'll see a really good setup, but the target is not very clear. This has happened on a lot of these trades lately where I get a trade, but the third ATR channel is right above me. So, you know, you have to have a good setup and you have to have some room to your profit target to give you a good risk to reward. Frederick says, a long higher shadow is a warning signal. I'm not quite sure what you mean by a long higher shadow, Frederick. Hey, Mount Doji's here. Good to see you. Hey, Dr. Jorgensen made it. I know he was traveling today. Good to see you, bud. Bruce says, money again while asleep. Great way to sleep peacefully. Thank you, Spy. Yep. All right. So listen, before we get on to looking through the possible trades for today, I did just want to do a quick bit of trader psychology. Um, I don't know who this person is. This was his header on his Twitter page. Sorry, I'd like to give him a little shout out there, but uh, he must follow Steve Burns because this is his header on his Twitter page. But trading and investing is 80% behavior and only 20% knowledge. If we can't control the person in the mirror, we can make a lot of money. Steve Burns. Totally makes sense. But I'll tell you, I think you could make the case that behavior is 100% because yes, you do have to know about the knowledge. But even if you know about the knowledge, it's your behavior that's going to make you take the trade or not take the trade. So I think I mean, yes, of course you have to know the technicals. That's important, but it still circles all the way back to your behavior. Just because you know something does you should do something doesn't mean you do it, right? So trading and investing is 80% behavior and only 20% knowledge. If we can control the person in the mirror, we can make a lot of money. By Steve Burns. Listen, if Steve Burns says it, you better open your ears and listen. But it's so true. Now, along those lines, I think it was Murrett. Was it Murrett was talking about trading in the zone, or was that Johnny? I can't remember. But regardless, this is such a great book, everybody. I mean, it's 8 hours on trading psychology because it's important, right? Just like I said, really, in my opinion, 100% comes back to your trader psychology. So look, this is free on YouTube. Just type in Trading in the Zone by Mark Douglas in YouTube. It's an 8-hour audiobook. It's just on YouTube. It's just free. So Murrett, yes, that's me. I've read this book several times before, but I listened to this book over the weekend again, and it's got some really good things in there. Everybody, do yourself a favor. You don't have to pay any money for it. Just go ahead and listen to it, and really listen to what he says. And he really says the difference between someone that's making money in the market and somebody that's not making market is just the way they think. And it's a simple statement, but how you look at the market, how you think about the market really makes a difference. So do yourself a favor, go to YouTube, Trading in the Zone by Mark Douglas. Listen to that, whether you're out walking or work, but it is going to help you. And yeah, Merritt says that is the best. It's such a great book. So, all right. Well, let's take a look now and see. Let me check. Whew. Well, I'll tell you what. I having a really nice green day today. Boy, this has been fantastic. What a great day. I don't want to jinx it, but I am within striking distance of yearly high today. Better knock on wood 3 times because I don't want to jinx it. But yeah, I mean, very, 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 very close. So, all right. Let me get rid of this over here. All right. Sorry about that. All right. Well, let's go down through and see if there's anything that's interesting for today. Apple's having a big day today, which is surprising after Friday's big move down, right? It's quite surprising. It's nothing that I'm interested in up here. It's just too high. Plus, we have earnings coming out. We have huge earnings coming out this week. We have Amazon, we have Google, we have PayPal, we have Visa, we have Facebook. So I'm going to be a little conservative in my approach this week with earnings because there's a lot of volatility priced into the options of these stocks, meaning that, you know, a 6% move up or 6% move down is about what the market is pricing in. This is interesting here though, but nothing for me. What I don't like though is that we're making this high, high, and high, and there is no momentum based on MACD behind it. So it's a little concerning for me. But anyway, there's just nothing on Apple. Silver having another big day. You know, silver had this huge, big volatility reversal bar on Friday. So the easy part of the movement, I believe, is over, although it's very, very strong today. We did buy back here on the 10th of July, and this was a great trade for us. We bought when the 5 EMA crossed over the 20 EMA. This was a mechanical trade, so I'm just going to stay in this until the 20 crosses back below, the 5 crosses back below the 20, or I just run out of shares to the upside, and that's exactly what happened back here on the 18th of July. So I phased out from here all the way to here. It was a really great trade. What percent was that? Oops. Well, it was a lot. We know that. All right. Yeah, over 14% from top to bottom. But we phased, so we didn't make as much. But still, really great trade just based upon a mechanical 520 cross. So now, not interested in getting back in it. But if any of you still have it, congratulations. But that was a great trade. Advanced micro devices, you know, we're fooling around with coming back into the value zone. You know, I like to buy in the value zone. I like us to move up. I like us to move down into the value zone, but that's just phase one. Getting into the value zone is phase one. Phase two is you need a proper setup. You need the bars to, you know, start moving sideways, reject moving averages, and then phase three, the most important part to me, is the trigger. Just because something's in a zone and has a setup, you need to wait for an entry signal to get you back in. You need a trigger, like red light, green light, right? Like everything looks good, the intersection's clear, looks good, but you can't go until the light turns green. And so that kind of trigger would either be a close under the 30, back over the 30, a rejection of an ATR channel or a moving average, or a V1, V2 entry. V1, V2 entries are really my favorite. So nothing yet on advanced micro devices, but we might look at it in the future. Amazon, you know, we had this nice move up. We're coming back down into the value zone. Is there a setup there? I guess a little bit. I mean, we're in the value zone. We have kind of moved sidewards, but we would need a trigger. And the only trigger that would allow me to enter this trade here now would be a move down, back up. Technically, this is a V1 today, but see, here's day one, here's day two. Day one washes out day two. Now we close above, I'm sorry, day one, day two washes out day one. We now are closing above day one. So it is a V2, but it's not a valid V2 because we're so high in the channel. Like the maximum I want to take a V1, V2 is right about here. So nothing on Amazon at the moment. We do have earnings. So I would definitely want to be out of Amazon for earnings. Man, Boeing has just been crazy. Look at this. We tagged the third ATR channel and reversed. This is a V1 to the downside, right? Doesn't mean I'm going to short that, but just wanted to, just for repetition's sake, here's day one, here's day two. Day two washes out day one. It certainly looks like it's going to close below day one. So there's nothing on here for me at all today. We actually did take a trade back here on 712 when we had this nice clean break above the 200-day moving average. We came from a lower low, so I only took a half a position. Next day stopped us out for a small loss, but I did like that it happened within the channel. The easiest movements come from the middle of the channel up to the third ATR channel, from the middle of the channel down to the negative third ATR channel. So that's why I prefer to take the majority of my trades in the channel. Then we went up, and then we went down, and then we went up, and then we went down. So nothing on Boeing. It's just too crazy here, and we do have earnings coming up also. So Alibaba, we did go and close up out of the 1 ATR channel. We came back in. Here's a V1, right? But again, this is just a good example of, yes, here's day one, here's day two. Day two washes out day one. Looks like we're going to close above day one, but this is too high in the channel. We're right at the 1 ATR channel. Some of our move has already been gone. So I wouldn't want to take it here. Red flag, it did reject the 100-day moving average, but who knows, this could keep moving up, but it's just too high in the channel for me to take this trade. Well, Caterpillar, here we make a high, we come down, we had a V1, now that V1 is gone against, now you have a lower high. Mount Doji, this is exactly what I was talking about. Here you make a high, you come back into value, but if you then make a lower high, then in order for me to get interested in this, I've got to wash this out down here. So I need a V1, V2 down in this area. So just made a note to myself when I see these lower highs to mention those to you. We do have earnings coming up, so nothing on Caterpillar. Murat says it's especially very useful for people who are analytical like me. I have found explanation for all the wrong trades I executed over the years. Yeah, he's talking about the book, Trading in the Zone. Johnny says, I think one can always get a little bit more money by repeated watching, reading, or listening to trading resources. Sometimes important points are lost until you have a foundation of prior experience. So true, Johnny. So true. I mean, you could listen to that book 100 times and still get something out of it. Okay, and then Murat posted a link here from Mike Douglas. He's the author of the book. Okay. All right. On to DDM. This is the double leverage Dow. We did get above the third ATR channel. Looks like we got rejected there. We've come back down. We're inching our way towards the value zone. This is where I would like to buy this, but there's really nothing today. I want a better risk reward set up like we had back here on a previous trade back in June when we closed above the 200-day. A close below the 200 was our stop, giving us a very small loss if we were wrong. But if we happen to be right, who knows, right? We could have a really, really nice trade like we did here. We phased out all the way here. It's all about risk to reward, everybody. Put yourself in a position where if you're right, you have some room to move. If you're wrong, you have a small amount of loss. You never know which way it's going to go. I mean, you never know, right? But at least you can put yourself in a position to have 2 to 3 to 4 times your upside as you do your downside. So nothing on DDM today. Walt Disney, okay, so here we make a higher high. Coming into the value zone, we went down, down. We are kind of starting to move sideways here. This is a good sign. So we're in the zone. We have now we have a bit of a setup forming. So the best thing that could happen is we could have a move down tomorrow, wash out that 1 ATR channel, close back above for a V1, possibly to have a nice ride back up. So, Walt Disney does look interesting. Not today, but it does look interesting. And you can see it's starting to look a little bit like we did back here when we took this trade on the 3rd of June. We were in the value zone. We had this V2, here's day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1, and we also washed out the -1 channel. So that's exactly what I'm looking for here. And you can see that was a beautiful trade, just 4 or 5 days up, boom, 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 got out right about here. So let's watch Disney in the future. Etsy. All right, so we did hit two profit targets today. Let's see. That previous high was 68.36, and right now the high was 68.36. So it pegged that previous high to the penny. If we can't close above that, I mean, I am going to take another 12% position size off just because it's a bit of a red flag. I'm not going to get out of the entire position, but it is a bit of a red flag. But it's been a great trade so far. Facebook poked its head into the value zone, right back up, did trigger a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1, but again, the entry is outside of the channel, it's just too high. 5 below, nothing really going on with 5 below at the moment. Gold. Well, we had that big day up and a couple days back down. You know, it's starting to poke its head back in the value zone. So I'll look for another trade in the value zone in the days or weeks to come. Have it come in the value zone, have it move sideways, look for a V1, V2 entry. But right now it's outside of the channel. It's just too high. This was another trade we took, very similar to silver. Same entry mechanism was the 520 EMA cross. You know, if we were wrong, we'd have, you know, most likely a small loss. But if we were right, as we were in this case, it was just nice, easy sailing. We scaled out all the way right up to about here. Google has been kind of all over the place. We are coming back into the value zone, which looks enticing, but then again, we have earnings coming up this week as well, so I don't really want to mess with anything. But just as an example here, we are coming back into value from a higher high. So, you know, basically what we want to do here is we want to look to buy a dip, right? So nothing right here on Google right now. Goldman Sachs has been really strong. It's just moved up and moved up and moved up. It's too high of an RSI. We're above the channel. Nothing really to take a look at on Goldman. You know, we did buy. This is an interesting example where we did buy here back on the 27th of June. And you can see I bought this well above the channel. So you might say, Greg, you say you don't buy above the channel. Well, most of the time I don't. But in this particular case, it's different because, one, we had a close above the 200-day, and we also took out this fractal. So that is why I did buy a little higher than normal. But this was a nice 2-day trade. You can see it immediately went our way. I think I scaled out here to here to here, and I think I exited the position here, but nothing on Goldman today. IBB, well, this is a V1 technically. Day 1, day 2 washes out, day 1 closes above, but you have to look at the bar. You have to look at day 1's bar. It's much bigger than one ATR channel, so I don't want to buy it. What I'm looking for in IBB is I'm looking for a 530 cross, the blue crossing over the 50. That's a good back-tested approach for trading IBB, but nothing on IBB today. Intel's had a big monster day, strong enough. Looks like that's going to close outside the 1 ATR channel, but nothing on there today. IWM we have. Johnson & Johnson, I have that by selling the put. Coca-Cola, just missed this trade right here because it didn't confirm on the short, but would have been a good move. But just quickly, the reason why I was looking at shorting this is because we make a high with strong momentum. We make a higher high with less momentum. We make another high with no momentum. Then we make another high with no momentum. So, you know, if you go up and up and up and up and up and you're starting to run out at each top, you're starting to run low on momentum, that's generally a sign it's going to turn back the other way. And that's exactly what it did. Excuse me. Lockheed Martin came into value and then was not even strong enough to hold value. So nothing on Lockheed Martin. Again, just to show you a previous trade of a decent setup is we make a higher high. We come back into value. We have a beautiful little V2 entry here inside of value, and we rode that all the way up. MasterCard, it's just too high right here. It's above the channel. It has a third ATR channel above it. Nothing that I like there. Here's a good example of another high coming back into value with a nice V1, V2 entry. Had a huge day the next day and the next day. Got out of about 50% here, then had to get out of the rest here at about break even. So this was a nice profitable trade. I was looking for another V1, V2 in here, but I just never got it. And sometimes it happens. You'll go into value, but you won't get a trigger, and that's it. What do you do? And that's going to happen a lot of the time. So just be happy with the ones that you have. And if you miss one, it takes off like this without a trigger, just be okay with it. You'll get another trade. Merck, oh, had that big strong sell-off. We did have that rally. I was a little concerned about this because we had such a strong down move, and then we had this rally, and now. So, nothing on Merck today. Microsoft, we had that huge reversal on Friday. Now, when you have a big ATR, when you have a large bar like this, larger than 2 ATRs, a lot of times you'll have an attempted rally the next day that will run out of gas at about halfway of the bar. And this is exactly what happened. So this concerns me a little bit that you have this big down strong day. From a Fibonacci standpoint, it's not unheard of to go back up and test that halfway. And that's almost exactly where we're at. So to me, that's not a particularly bullish sign that we couldn't go. Looks like we're going to close lower than halfway of this bar on lower volume too, by the way. Netflix, boy, ever since earning, it's just been a downward train. It's 308.79. I have a feeling it's going to test that $300 level, but really, I'm not interested on Netflix in any way, shape, or form right now. So Nike, Nike really is looking pretty good. We moved up here. We've had this nice orderly move back down into the value zone. If we had another day sidewards, and then in coming days we had a V1, V2, this would be an excellent place to buy this. Ideally, I'd like to have the V1, V2 where it comes down a little bit more, goes under the 1 ATR channel and the 100, then comes back up and triggers. So I'm definitely watching Nike. This looks pretty good. We could get an entry tomorrow. If tomorrow we went below and closed back up for a V1, I would take that also. So, be patient, sit on your hands. This is starting to look good. There's no doubt about it, but we have to be patient and we have to wait for that signal to get us triggered into the trade. Philip Morris had that big gap up on earnings. Now it's come back a little, so nothing there. PayPal, we went above the channel, the 1 ATR channel. We're moving back into the value zone. Looking for a V1, V2 here would look good, but we do have earnings, so I kind of feel like that's going to preclude us. But, here's another example of coming high into the value zone, moving sideways, having a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. And you can see we rode this all the way up here. It was a beautiful trade. So, looking for something like this again here in the value zone. The Qs, same with Microsoft. We had this big down bar day, and now we're stuck right about halfway. See, when you have this big down bar, bigger than 1 ATR, a lot of times that next day, if you attempt to rally, it's going to get denied at that halfway point. So nothing on the Qs today. It should be interesting. Here was an example of a really nice trade, risk to reward trade, where we went under the 200, back over the 200. If I was wrong, just to close under the 200, I would get out. This is important to position yourself as close as you can to where you say I'm wrong. So even if it closed 1 penny under that 200, I would have been out. But if it went my way, which I have no way of knowing, I have to be patient with it. And we phased out, and we got out. I think we got out right here, but that was a monster trade compared to what the risk was. So always factor in risk to reward on your trades, everybody. Snapchat. Snapchat looked like it was coming into value, but was not strong enough to stay into value. So there's really nothing on Snapchat. We do have earnings. S&P, well, we're going to be buying that again at the end of the day. Square had that nice move up. It has been selling off for like the last week. Same as all the others, guys. We're looking for a dip back into value. Here's a really good example of a double bottom with a bullish MACD divergence, where you have a low, you have a rally, you make a lower low. See how narrow the bars are here. See how deep they are over here. And then the next day, we trigger the V2. We close back into the old range, meaning this was a false breakout. We trigger back over the back into the channel. This, I wish I could see this trade come every day, because this was a great setup, and you can see this was a great trade we had up to here. SSO, which is the S&P, this looks good. It moved up, back down into value. Just need to have a trigger. Just need to have a trigger to the upside. Nothing there. Bonds, nothing there. Tesla's had a really great move, but nothing there. Twitter, trying to come back in the value zone. Natural gas, nothing there. Oil, nothing there. The dollar's been all over the place. No trade there. VIX, we do have that. The close under the 30, the close under the 30 ATR channel, close over the 30, close over the 30 ATR channel. Just kind of moving sideways. I am going to hold this. Verizon. Well, obviously there's nothing on Verizon today. Maybe if we get down to the 30 RSI, I'll take a look. But, I did enter Verizon here on the 12th of July. We had this high. We make a higher high with the V1 reversal. That is negative, but then the next day it goes positive. We did take this trade, hit a profit target here, came back, came down. This ended up being a losing trade, but thank goodness, right, that I got out when I was supposed to. This was my exit. I got out when I was supposed to. There's no reason to stay in this trade. And look what would have happened if we had kept on that trade. Oy. XLE, we do have that. That is up today. Again, if it closes over 50, I'm going to go ahead and just keep this trade. Financials. It's a V1, but you see how we have a lower high, Mount Doji? Here's the high. Here's the lower high. So in order to get interest, in order for me to have a valid trade on this, I need the prices to come down and wash out this low. Real estate, nothing there. Utilities, nothing there. Healthcare. I had a lot of hope for this trade. I did buy this trade back on the 18th. We moved down. We had this beautiful sideways movement. We stabbed down, reversed back up. I had a lot of hope, and it just went. We had to get out on Friday for a loss. It's down even more today, but I guess the reason I'm bringing this up is no matter how many indicators you have, you think you have the perfect trade, it doesn't mean it's going to go up. I mean, congratulations on waiting, for all those indicators to line up, but just because they all line up, treat it like any other trade, and if you're wrong, just get out, and that's what we have to do. And pharmaceuticals. I did go through the S&P 100 today too. I wanted to see if I could find some other potentials. I just want to point these out. Here's Berkshire Hathaway. It's a little interesting here. We're at the third ATR channel to the downside. We haven't seen a lot of that. We're at a 3488 RSI. So, going in the future here, if we close below and then close back up, might be interesting. Costco looks like it's going to lose its 5-day moving average after this big move up. So that's kind of interesting. A long time since it's been below the 5 ATR channel, but I'm not going to short there or anything, but I just want to point that out. Home Depot moved down into the value zone. So, be patient. Look for a V1, V2 entry. Kinder Morgan. We had this big move down. Now we're rallying to the 50 RSI. But see how earlier in the day we were above 50. Now we're below. This looks pretty bearish. Lows. Same with Home Depot. Technically, it did trigger a V1 today, but this bar was too big. And then AT&T. Look at this. I mean, everybody wants it. Nobody wants it. Did bounce off the 50-day moving average, which is interesting. But I'm not going to do anything there. So, all right. So to me, it looks like we have no potentials to look at today whatsoever, which is fine. Congratulate yourself. Pat yourself on the back. If you look through all your stocks and you can't find anything, that means you're maturing as a trader. You're not just trading to trade. So let's look at my current positions here. Oh, goodness. 68.36, and now we are at 68.62. So that looks really that looks really great. So it looks like I will not be taking off my portion because of the red flag, because it looks like it's closing above this, which is good. Although I'd like it to get up to 68.76 because that is my just normal profit target. So this looks really good. Nothing to do here unless this closes back below that previous high. IWM is fine. SPY, looking to buy that again at the end of the day. VIX were fine, and XLE, as long as this closes above 50 RSI, we're good. So let me just make sure I've got all my particular trades in. So I do have the SPY. Looks like I'm going to be okay on energy, but I'm going to just queue the energy up in case it does close below the 50 RSI, that I can sell it right away, but that's going to be a game time decision. Well, I'm very happy for a nice profitable day today, everybody. Woo! Boy, what a day. What a day. So we've got 2 minutes left. So I just have to buy the SPY, and I just have to make sure that the XLE does not close below the 50 RSI. And yeah, no, I did not see any other trades today. But don't have trades just to trade them. Don't take trades just to trade them. Don't justify them in your mind. Say, it looks decent, right? You're better off just being flat. Being flat is a position, a legitimate position. All right, so we have 1 minute left. So the NASDAQ is the clear winner today. The other indexes are just basically flat. Look how close Etsy is to that profit target. But again, I'm not going to phase out of that red flag phase out because it looks like it's closing above that previous high. If it hadn't, that would have been a bit of a red flag to me. All right, so it looks like energy is gonna
order filled. Order filled.
All right. So we did buy SPY again today at 297.90. So for tomorrow, this is our overnight level. So let's see. 297.90. All right, there's our new entry. So listen, if you guys have any questions at all about what I discussed today, if you're not clear on something, please let me know. If you have questions about some other part of trading or trading psychology or any issues you're having, please just let me know. Type them into the chat. Don't be shy, and I'll do my best to answer them. Before I get to answers, I do want to just put in a quick plug, let you know that I do offer private one-on-one teaching and coaching and mentoring lessons in the evening time via Skype. I really like to teach, and I've had really good success with my clients, really turned them around from losing traders to winning traders. And you watch the live stream every day, you hear me talk all the time, but if you do book a lesson with me, what you'll find is I'll teach you first, but then a large portion of the lesson will be me asking you questions, having you teach it back to me. Because when you're watching me do this, you probably go along and go, oh yeah, that makes sense, and oh, okay, that makes sense. But if I put you on the spot and say, all right, Mount Doji or whomever, okay, break this down for me, then it's a little bit different, because then it's on you. But then I really know that you know it, and that's important, because I really want you to leave that lesson being a better trader than you were before the lesson. And then also, if you like this channel, if you're getting some value out of it, if you're learning something valuable, please do me a favor, hit the thumbs up button. It helps Google get the channel out to more people, promote it to more people. There's a lot of people that have an awfully hard time with trading financially and emotionally, and I know if they come to this channel every day, it can't help but rub off on them and give them hopefully some good trading principles that maybe they'll start using in their trading to improve their trading. So if you can, do me a favor, hit the thumbs up button, and if you haven't subscribed to the channel, do that as well, and share it on social media, and tell your trading friends about it and help me grow the channel. So, all right, well, that is my plug, and let's go ahead and take a look and see if we have any questions. Frederick from France did send me some charts that I'll be going over also. All right. Murat says, can you go back to utilities? Why did you say nothing there? Because of the size of the bars. All right, let's take a look. Was it utilities for sure? Because really, on utilities, there is nothing here. Even if we had a V1 today, I still wouldn't take this trade, because this bar here is larger than 1 ATR. But I'm wondering if it really was utilities, Murat. Could it possibly have been something else? But yeah, there is nothing on utilities here today at all. Mount Doji says, like to look at AMTD. Oh, Ameritrade. All right, Murat says, yeah. So I didn't see anything on utilities, Murat. Yeah, so this is interesting. Were the earnings today, or were they this morning or this afternoon? Let's take a look real quick. All right, so it's the earnings are after the bell. Mount Doji. So I certainly would not have bought this today because of the earnings. It's an interesting choice here. You do have a nice strong close above the 200-day on good volume. But the way I would look at this trade is, my theoretical profit target most likely is going to be the third ATR channel, which is this distance. If I'm wrong, I'm wrong to here. So there might be a touch more upside than downside, but I wouldn't say 2-to-1, but it's kind of a moot point because earnings are today. So I certainly would not have bought this in front of earnings. Mount Doji. Oh, wait. Mount Doji says, I entered AMTD a little earlier today and I'm holding the position overnight. All right. Well, you're holding through earnings, Mount Doji. You realize that, right? I hope you saw that. I hope you saw that we had earnings today. Okay, good. So you went in small because of earnings. At least good. That's at least good. I hope they're good for you, buddy. Johnny says, I no longer feel bad about hitting my stop loss on Verizon. Yeah, me either. I had that trade. I hit my stop loss, and I was just pointing out, I mean, good thing that, we stuck to the plan and got out, right? I mean, there was no reason to stay in this, because not only did it lose the 5, the 10, and the 20, it also lost the 100. So it's days like this where Friday you're like, dang it, dang it, dang it. But today you're like, sweet, right? So Murat says, there's a quotation from Jesse Livermore. I want to tell you this. It's never was my thinking that made the big money for me. It was also my setting. Got that? Yeah, I know. That's a very famous setting, Murat, and it's true. Yep. That's not the thinking. It's the being patient with it. And that's the artistic part of trading. That's why I have those mechanical trades where I just don't do anything. A lot of times I'll hold those. They'll get us with the 70. They'll come right back down. I'm like, dang it, I should have taken it the 70. But I'm like, no, Greg, it was not a discretionary trade. It was a mechanical trade. Every once in a while, you're going to catch a monster like that. So you're right. But it's a fine balance between sitting on your hands and not doing anything, and then adjusting the positions if you get red flags. So on my discretionary trades, I adjust when I get red flags. On my mechanical trades, I just say, okay, I'm in this for the long term, as long as I don't get stopped out. Thanks for sharing that, Murat. It's a good point. Frederick says, do you enter a trade if there is a good setup but earnings are 5 days later? Yeah, I will, Frederick. Because a lot of times you'll get a run up into the earnings date. I mean, for example, let's look at Google. Let's go back to Google. See right here? See how it ran up into earnings and then add horrible earnings. But yeah, it's okay to take a trade into earnings as long as it's a decent trade, but please make sure that you get out. But yes, a lot of times stocks will run into earnings. Yeah, on utilities, this bar was just too big. I mean, think about what a large bar means. If it's larger than 1 ATR, it means that it took an extraordinary amount of selling to make that bar bigger than 1 ATR, because the average is 1 ATR. So if it's larger than 1 ATR to the downside, that means there was an inordinate amount of selling coming in. So why do you want to get in front of a bar that just had an inordinate amount of selling? It's just not a good policy to do. I mean, sometimes, look at Apple. Apple had this big down bar, and presto magic, right against. But that doesn't normally happen, right? And we want to play the odds. We want to play something that happens more often than it doesn't. This is an exception. Hey, look, some people get in car accidents and they're not wearing their seatbelt and they're just fine. But you take 100 car accidents, most of the people that wore their seatbelts are going to do better than people that didn't wear their seatbelts. And there's always going to be that guy. Yeah, but I know this one dude, he got thrown out and that's what saved his life. And yeah, sometimes, it happens, right? But we're playing the odds. So that's why I do not like to get in front of large range bars larger than 1 ATR on the way down. FL for Mount Doji. Foot Locker. So, this is interesting. We had this move up. We had this V1 to the downside. This is what painted this triangle. Then today we did go higher than that. But what I don't like about this Mount Doji is on those days where you get the move up, you get the reversal, painting the triangle, and then back up, it didn't close above that high. So that is a little concerning to me. And even if it did, it would have been a little bit high. And I don't like, we've had 2 days of up here and reject and up here and reject. So I don't think I'm a big fan of that one. Yeah, even zoomed out, I mean, I just don't like that we went up and down and up and down. And even though we did have a triangle, we did not close above there. Murat says, what is the percentage of your mechanical trades? 50-50? That's tough to say, Murat, because it really depends on if I get signals or not. Sometimes they're 50-50, but I would say most of the time they're 75 discretionary, 25 mechanical. Because, if I don't have a mechanical trade, then I'm going to buy more discretionary trades. If I have a good chunk of mechanical trades, then maybe it becomes more like 50-50. But I would say most of the time 75-25. I mean, if you look at it right now, we have Etsy, that's discretionary. We have IWM, that's mechanical. We have SPY, that's neither. We have Verizon, VIX, that's discretionary. We have XLE, that's discretionary. So at the moment, we have 1, 2, 3, 4, 5 positions. Only one of them is mechanical, which is IWM. Steve Burns says the easiest way to eliminate the potential for big losses is not to hold through earnings. Big earnings are the number one thing that makes a trader unprofitable. Plenty of trends before and after earnings to gamble. Yeah, Steve's 100% right. I mean, it just is not a good policy, everybody, to gamble through earnings. You just never know what's going to happen. There's ways to enter trades after earnings on gap ups and things like that. But as a general rule, everybody, it's just try not to do that. Now Doji says, I like RTN, but the volume scared me off. Yeah, that's a good point, Mount Doji. I mean, we did trigger a fractal, which is good. Volume wasn't that high. You're 100% right. And we do have earnings coming in here. I mean, kind of back to what we were talking about, buying before earnings. You could buy this and wait 4 or 5 days and get out before earnings. I mean, this might run into earnings. I don't know. But I mean, it's okay. I mean, it did trigger a fractal. It is above the 1 ATR channel, which makes it a little high for me. But the fractal is also good. But I 100% agree. I mean, you're getting really good, Mount Doji, at assessing these small little nuanced, granular parts of the trade, which is really good. Proud of you, man. All right. Hey, let's take a look at let's take a look at Frederick's charts. And I got to tell you, Frederick has been making some good trades and some good analysis. So, and I like here on his charts, he says when he bought, on the date he bought them, why he bought them, some other notes on the trade, but it looks like he bought this on the 18th with this V1. So it looks like this was the trade right here. I like that. It washed out the 200-day moving average. It washed out these previous lows. And then it triggered a V1 entry. And he's had two nice moves up here. The RSI is at 49. So, the way I would manage this trade, Frederick, is, if we got over 50 intraday and then close back below 50 day, that's probably what I would use for my exit. I don't know if you're scaling out. You know, if this were mine, I would have scaled out a little bit. Let's say we move up and we move up above that 100-day, and it closes above the 100-day. I would probably then use that 100-day to close under the 200 as my trailing stop. So nice trade on that one. What happened to my charts? Man, something always happens when I do that. All right, that's the one we just talked about. Here's another trade that he bought. 719 bought the V1 close above the fractal. RSI under 50, previous bar, big mesh, test the SMA 200, MACD negative with divergence. So yeah, so you bought this one here when we had the V1, same thing. We went down, took out the low, we tested the 200-day, we closed back above. So that was a good buy. I mean, let's see, RSI, we're at 49. Same thing with that. I would be looking for a rejection of the 50. If tomorrow we moved up above these moving averages and then back down below, I would probably take my profit there. So I would be aware of these moving averages above me and aware of the 50 RSI above me to see if that holds. But if the next day it moved up and it moved over the 50, held the 50 RSI and also held these moving averages, then I would keep it and then use that and use those below me as my trailing stop. Here's another one he bought on 719. All right, so you bought this here on Friday. Did move up, which is nice. Looks like you bought this V2. I probably would not have bought this just because it's a little high, but nonetheless, it did move up. It triggered a fractal today, which is also good. We are at a 62 RSI. So, you know, moving forward here, if we get up to the 70 RSI and reject it, that would be my exit point. You know, look at the second ATR channel here. If we reject that, that might be a red flag. You might want to take some of those shares off. And also, if we get a low, if you get a bar in the future that takes out the previous day's low, that would also be another place to get out. So let's see, we did that one. All right, so I think we got them. All right, good job, Frederick. I really like those setups. I mean, you're really getting good at those. So congratulations. You're helping me talk myself out of mistakes. I appreciate all the help. Mount Doji, there's so many mistakes that you can make. You know, just try not to make them. You know, just make a deal with yourself that you're going to be mistake free. You're not going to err. You know, you're not going to say, well, I'll just do a little, or I'll do a little of this. It's okay. Just get in the habit of trading correctly all the time. And after a while, it will become a habit. And in the long run, your results are going to be better. I can promise you that. Murat says, can you tell the stocks as well? Murat, I'm not sure what you mean by that, my friend. Can you tell the stocks as well? Yeah, I'm not. Maybe you can elaborate on that. Let's see if we had some earnings after here. Oh, I see. So let's see, this first one is Korean, K-O-R-I-A-N. And the second one is Sanofi, Sanofi. The third one is FNAC Darty. Sorry, I'm not familiar with any of these, but good trades he had, huh? And the last one, oh, I don't think I went over this one. POXEL. This was nice here though, right? Look at this. You have a higher low, V1, rejected the previous day's low, closed above, also closed above the 200. Yeah, I like this a lot. I mean, just to close under 200, you're wrong. You have a small loss. But if you're right, you know, you have a nice move probably up to there. So POXEL is the first one, POXEL. The second one is KORIAN. Third one is SANOFI. And the last one is FNAC Darty. All right. Good choices, Frederick. You're welcome, Mount Doji. Hope you're doing well, my friend. So you did take Ameritrade, right? AMTD. Well, it's up 2 cents after hours, so that's good. I don't know if they've really come out with earnings today yet, though. All right, everybody, listen, last chance for questions. Otherwise, I'm going to put on my hiking boots and go hiking. Hot day today. It's going to be a good hot hike. Glad you guys are sharing your trades with me. Really like to see that and hope that you are making some progress and you're starting to narrow down your trades and really waiting for those A trades. You're welcome, Frederick. So, all right. Well, listen, we're going to be here tomorrow again, God willing, during the last hour of the market. And I hope you have a good rest of your day, and I hope to see you tomorrow. Go out, do something nice for somebody today. It's good for you. It's good for them. And yeah, that's about it. So if you guys have any other questions that you were not able to ask me, feel free to send them to me by email. My email's in the description, or you can send them to me on Twitter. So Frederick, good seeing you. Thank you for coming. Muritz, good seeing you. Thank you. Mount Doji. Steve Burns, thank you, my friend. Always an honor to have you here. Johnny, good seeing you, Johnny. Thanks for coming. And Dr. Jorgensen, thanks for coming, bud. Appreciate it. We had a good day today. And Ramble Ron and JT. So thanks everybody for coming. Hope you have a good day, and hopefully we'll see you tomorrow during the last hour of the market. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.